Hey, what's up, CMQ investors? This is your great friend, your confidant, your favorite bald-headed man that talks about investing better than Jim Cramer and Kevin O'Leary. Of course, I mean, come on. What I want to share with you are some thoughts on Snap. I was asked a question about this, and I have, as you guys know who've watched my content about Facebook and just the advertising the advertising ecosystem, I definitely have something to offer here that I think will be worthwhile, and it'll also allow me to kind of bring something to surface that's really helped me as an investor, and that is some of the time-tested lessons from someone like Warren Buffett and Charlie Munger. So let's just give a little recap here. Snap fell off a cliff, metaphorically speaking, on a couple days, or was it last week? They had their earnings release, and I mean, it just got obliterated. The stock was chilling out at 55, and then let's fast forward. Sorry, I blew that. Where were we? Oh yeah, let's look at, that's 5 years. My bad, guys. What we're trying to see here. So this month before earnings, Snap was hovering around $11. Earnings came out. They didn't do very well, and $7.76. Now, the question I was wondering is, one, why were people so surprised at the results? And two, why would anyone want to own this company in the first place? So the reason I steer clear of something like this is going back to a lesson from Warren Buffett and Charlie Munger. If you're going to buy and hold individual stocks, and that's usually not a good idea for most investors, if you're going to do that, you need companies that have durable competitive advantages. Without that, you really don't have anything that's, worth having. Let me give you a few examples here, then I'm going to show you something from Snap's earnings call transcript that I found interesting. So I just put this together like 2 seconds ago so I could show it to you visually. Warren Buffett has said that the key to investing is determining the competitive advantage of a given company, and above all, the durability of that advantage. Morningstar has a great quote here that I'll share with you. The reason you want this competitive advantage or this moat is because capital seeks the areas of highest return. And whenever a company develops a profitable product or service, it doesn't take long before competitive forces drive down its economic profits. Let's say, I've used this analogy on the podcast before, the CMQ Investing Podcast. Check it out. Over 120 episodes of amazing content, all for you to listen to on Spotify, Apple Podcasts, etc. I'll put some links in the description. But one of the examples I've used in the past is, if you and I started a car wash together, it would be a wet, I was going to say wet t-shirt. It is, actually, let's roll with that. It would be men wearing white t-shirts that get wet throughout the day so you can see our beautiful physiques. Naturally, this would probably be something where, people are crashing their cars because they're, turning their neck. Oh my God, look at those beautiful men. And then we'll also open up a automotive repair shop, kind of adjacent to the store or the car wash, and we can just make a killing. But in all seriousness, let's say that we have some sort of, special soap or whatever the case is, something that makes our car wash better than others. It's only a matter of time before your competition says, they're making some good money over there. What are they doing? And if they can do it, they're going to start doing it. So back to this Morningstar quote, only companies with an economic moat are able to hold competitors at bay and generate economic profits over an extended period of time. Warren Buffett has said that Coca-Cola is the perfect business because it has a gigantic, durable competitive advantage, and that gives it predictable cash flow. So, this is what it comes down to. As investors, long-term investors, what we're able to, get from the investment during the lifetime that we have it, that's the real value, right? The amount of cash that it spits out at us. And so a company that's able to protect its cash flow, that's something that's going to do a lot better for the individual investor than a company that's, either struggling just to compete or a company that's very vulnerable to competitive attacks. In the case of Snap was never the leader in its category. If we use, let's say, social media advertising as the broader category here, Facebook or Meta has always been dominant, followed by, you could say, Twitter, but Twitter is a long distant competitor. Then you have Snap. These are companies that are just, they're fighting just to eat Facebook's crumbs. Now, you might say, well, Facebook, they're very vulnerable right now, and I agree with that. But keep in mind, there's now more places to advertise than there were, prior to the pandemic. Uber is coming out with new advertising options. Netflix has an advertising tier now that people will be allocating dollars to, meaning advertisers will. And that's going to, again, I should say, that's another area where it's going to affect Snap, because Snap is dependent on advertisers allocating larger percentages of their budget to Snapchat ads. And so if there's more places to put ads and Snapchat already isn't, the dominant player because they don't offer, some exceptional advantage, well, that's not good for Snap. So I just don't understand with that thinking, what would it be about Snap that would make you want to own it in the first place? But let's not, get too deep in the weeds there. Just something to think about. I read through the earnings call transcript for Snap, as I like to do when there's a new, earnings come out for a company that I'm interested in. And a couple of highlights here. I thought just more like, environmental stuff. Hundreds of millions of people are using AR every day, meaning augmented reality. That's something to keep an eye on. I know Apple is really bullish on this, so just a trend to pay attention to. Let's see. They mentioned something I think a lot of businesses are dealing with right now, which is that in the current environment which we're in right now, and today is October 25th, 2022, the cost of capital has increased quite dramatically. That is a product of many things, but the one I think is probably the biggest, and correct me if I'm wrong, rising interest rates. Then they said here, operationally, our advertising business has become a lot more technically complex over the past few years as advertisers are working to better measure and optimize their campaigns. Warren Buffett has also talked about, avoiding businesses where you have to stay smart. You could make the case that this is a business that requires you to stay smart, and therefore it's not as advantageous, because when you have to stay smart, that means you're having to continue to adapt to an ever-changing environment, and whatever your advantage was in the previous environment might not be the same in this new environment. A couple other things here, and this is certainly I can relate to this because this is 100% the truth. They note that advertisers are looking for reach, which means how many people you can reach with a given ad. The Super Bowl is a popular destination because you have a built-in audience of tens of millions, if not hundreds of millions of people who are captivated and watching the ads at a set time. So that's, we talk about reach. But they're also looking for performance, especially in this period of time. And that's why we focus so heavily on evolving our direct response business and making sure that we're really delivering return on ad spend, which is also ROAS or ROAS for our partners. So, and that's, again, going back to what I said earlier about the different advertising platforms. Snap has not shown itself, except for certain categories, to be this overarching dominator like Meta has historically. Last thing here, they say about the improvement to make their direct response ads convert. And these are the kind of results we're talking about. They say this improvement is happening through more experimentation with ML or machine learning and integrating data from our privacy protecting first-party measurement solutions so that our ranking and personalization are more effective. This is all great, but for the ads that are going to be used to, let's say, drive a sale on a website or somewhere that's not on the platform, that becomes increasingly difficult, especially with these Apple, they're no longer changes, but the Apple privacy policy that now exists. So whether it's Snap, whether it's Meta, they're working on keeping people within the walled garden and getting better reads on the data there because they can actually control that. The problem with this is unless they're doing something that's transactional, it's a lot difficult. It's a lot more difficult to make a prediction, meaning the machine learning you can't build a model that can predict if someone has a higher propensity or higher likelihood of doing something off the platform that would be that would have a dollar value assigned to it. So not to get too deep into the weeds there, but I do want to give you guys kind of the full meat and potatoes. Apologize to any vegans out there. Oh my God, I'm so offended. I don't eat meat. All right, so last but not least here, something I'm not saying that you should just look at these metrics and call it a day, but I've talked before, I like return on invested capital. I think that's a really interesting, telling metric. And if you look at Snap, Twitter, Meta, let's just look at these three because these are most comparable in terms of what their primary business is. Snap has a negative return on invested capital, something that I think is you're not exactly getting a company that's crushing it. It's just, it doesn't mean they can't. Maybe people are thinking, excuse me, I had coffee a second ago, so I'm like, blah, blah, blah. Maybe people are thinking that, hey, Facebook is vulnerable, so Snap can make up some ground. But it's not as if the only place to put advertising dollars now is Snap. There's actually a lot of places to put it. It could be podcasts. It could be on YouTube videos like this. It could be Netflix. I mentioned Uber. There's a proliferation of advertising destinations. And, people are that means diversification of channels, which means, less concentration for any one. And Snap was already not doing a great job of capturing the market share. So anyway, that's my thoughts. I want to leave you with one more thing, and this is one of my favorite lessons from Warren Buffett. It's the reason why I don't take Cathie Wood seriously.
Absolutely.
Because of this. It's just an investing fact. Going back to my little document here, Warren Buffett says that he doesn't dwell on there's plenty of glamorous businesses that dramatically changed our lives, but concurrently failed to deliver rewards to U.S. investors. He mentions the manufacture of radios and televisions. He's also talked about the automobile industry. But he says, I will draw a lesson from these businesses. The key to investing is not assessing how much an industry is going to affect society or how much it will grow, but rather determining the competitive advantage of any given company and, above all, the durability of that advantage. The products or services that have wide, sustainable moats around them are the ones that deliver rewards to investors. So if we're going to buy an individual stock, if it doesn't have a durable competitive advantage, I don't know the point. If you are truly a long-term investor, I don't see the value in buying anything that doesn't do that. So anyway, that's just my take. Feel free to leave comments. I hope you guys enjoy these, the kind of quick takes here that I do with these, a little bit less production value, but plenty of value in terms of what I'm trying to talk to you about. I've also got more videos on the way that are a little more high production value. But if you're looking for more content, especially some stuff that has the wisdom but also has some humor sprinkled in, check out the CMQ Investing podcast. Check the links in the description. And thanks so much for following. Thanks for watching. Thanks for subscribing. I'll talk to you soon. Later.